Good morning, everybody. Welcome to the game plan. Of course, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Big data this morning. The jobs report was just released. Let's take a look at the numbers. All right. Non-farm payrolls coming out at 177,000. That's better than the 138,000 forecast. All right. So again, a better headline number there. Unemployment rate coming in at 4.2% as expected. So nothing surprising there. Average hourly earnings down slightly lower than expectations, 0.2% versus 0.3%. Now, most people would say, oh, that sounds bad. Hourly earnings are down a little bit. If you're looking for things that will bring down inflation, you want to see hourly earnings lower. So believe it or not, that's actually good news for investors and the market that are wanting inflation to come down. So far, non-farm payrolls better than expected, unemployment rate in line, and hourly earnings slightly better than expected, meaning down, which is what people prefer. U6 unemployment rate came in at 7.8%. The U6 unemployment rate, folks, is people that are underemployed. So it might be someone that is looking for a full-time job, but only can find a part-time job. That would be U6, so underemployed individuals, okay? And again, that is slightly better as well at 7.8% versus 7.9%. The only negative in this report was that, and this is kind of the common theme, and I know a lot of you guys are on point with this, is that last month, the jobs data came in at 228,000. It was basically revised down to like 180,000. So essentially like a $40,000 revision to the downside. And so if you're like me, you're saying, okay, yeah, so jobs came in better than expected at 177,000 today, but we'll probably see a revision down of 20 to 40,000 next month when they look back at this month. And remember, this is only the 2nd of May, so it's only basically 2 days or a full day after the end of last month. And so they just have the preliminary data, which again opens the door to major revisions. So overall, listen, I always say this to you guys. There are a lot of people out there, including myself, who are kind of skeptical on the jobs data numbers because of the revisions. Like every time, every month, the revisions come down. But in all fairness, it doesn't matter if you're a stock trader or a market trader, right? Meaning if you're an investor, what matters? What's the truth teller? And the answer is the stock market. If the stock market is going up, it doesn't matter how skeptical any of us are. You have to look at that and say, hey, listen, markets are rallying on this data. So right now it's good news. And that's exactly what we're seeing. Let's flip over to the charts here. Look at the S&P 500 or the S&P futures. Take a look. This is where the jobs data came out, and look at the move to the upside. Now, last night or yesterday after hours, we saw a nice dip in the futures on the back of Amazon and Apple earnings. I mean, just talk about incredible data, earnings, all these different things hitting the market. But nonetheless, the markets were trading sharply lower yesterday in the after hours, then in the overnight kind of going sideways. And then all of a sudden, around 10 p.m. Eastern time or so, we saw this massive move up in the futures. And this move up here, folks, this one that basically negated the drop on Apple and Amazon on earnings, this was when news broke that China said they were open to trade talks. Okay, so basically China for the first time, right? So we've had the Trump administration and Trump specifically say, oh yeah, we're talking to the Chinese, we're doing this, we're doing that. But in essence, the Chinese had denied it, right? They said, nope, it's not happening. Finally, the Chinese, they're not saying they're talking yet, they're saying they're open to talks. And the market obviously rallied sharply on that, per what we're seeing in the S&P futures. So the markets rallied up, which basically negated the negativity of Apple and Amazon earnings. Then we just traded sideways here to slightly lower into the jobs data and then popped to the upside. All right, so really a big recap there of everything going on, but that is why the markets are trading where they are today, between the China comments and then the jobs data. That is propelling the markets today. Now, I want to flip over to the S&P 500 here and go to the daily chart, because yesterday the S&P 500, we got very close to gap fill. Now, remember, this was my target on the S&P, around 56.75, give or take. We yesterday kissed that level. We did not officially tag it. However, with today's rally in the futures, and we can go back to the ES futures here, the futures chart, you can see we are basically just a fraction away from officially tagging my target level. Here's my target on the S&P. There's your gap fill right there. And again, we are so close. I mean, basically, we're talking about on the S&P futures, it's 5,700. On the S&P, it's about 5,675. But the point being is we're literally 7 points away on the S&P from hitting gap fill. Okay, so that should happen today. I'd be very surprised if we don't fill the gap today on the back of this. In addition, it's Friday. Markets in general, as long as there's no worries about really big negatives over the weekend, markets will see short covering likely today. Now, the question is, once we fill the gap on the S&P, if we flip back to the S&P, once we fill the gap here, do we then start to sell off? And that's my belief, is that there's always a chance we could open higher on Monday, right? We all know that. But we should be now at a key critical level via technical analysis and probability where it starts to become a negative, right? So all the way up here, I've been bullish on the S&P, right? I've been talking to you guys for a long time saying, listen, even when we were down here, I said, listen, as long as you don't close on the S&P below this low right here, and all we did was test it right here, then you have to remain bullish until we get to gap fill. Once we're at gap fill, I actually think the bias now flips to slightly bearish. And listen, it doesn't mean it's all out bearish. It doesn't mean it's going to turn on a dime. But even if we go higher, for me, I'm going to just continue to start to short the S&P. I'll short a little bit more up here if we get up here, and just essentially begin my accumulation, pretty decent accumulation on the short side of the market. And listen, I could be wrong. Listen, we could go to all-time highs for all I know. But again, I'm using data and science, essentially chart analysis, which give me probability. And that probability will say that, okay, there's a higher probability of this scenario. And therefore, again, I just automatically do that. Doesn't matter what I think, what I feel, what I think about the numbers, whatever. Frankly, it doesn't matter. It's what are the charts telling me? Shut out that emotion. Use your logic, use your data analysis. Okay, so let's get back to the charts here and take another gander. Flipping over to the 10-year yield, you got to appreciate the lines here. The trend lines are absolutely remarkable. Downsloping trend line, and look at the yields. This is the 10-year yield, so the interest rate on the 10-year. And look at how, again, came in, and then we've turned back to the upside. Today, rallying higher. Why? Well, because the jobs data was good, right? So again, the jobs data being good and China being willing to talk means maybe there's a deal with China. And remember, China owns like $1 trillion of treasuries. So if we have bad relations with China, they might at some point dump all of those treasuries, which would be a negative, obviously. Here in this scenario, because it's good jobs data, and if we can get on good terms, it stabilizes maybe the global economy, and therefore maybe the economy isn't going to go into a horrible recession, maybe just a slight recession. And I think you're seeing interest rates move up as, again, any positive news on jobs and on the economy is going to make it less likely the Federal Reserve will have to cut rates as aggressively. All right, let's turn our attention to earnings. Apple, you can see here, Apple after earnings plummeting pretty sharply here for Apple, trading down to about 204 in yesterday's after hours. Then this morning, because of obviously the overnight rally with the China news, it traded higher, then has faded, and then obviously on the back of the jobs data, it's pushed back up. But we're still negative on this chart. Now, again, if we look at this, we're trading just down here. So notice how it's not a big move, right? There's really, you wouldn't look at this and say, oh my goodness, this is down so much that there's an obvious bounce coming. And therefore, as a day trader, it's very hard to pinpoint. My first level for day trading on Apple would be right here at this gap fill pivot point at 193. All right. So again, it just, that's really the only level I'm seeing. And considering Apple is so far away from that, there's not much I can do. Now, having said that, is there a short level? Well, as a day trade, of course, I mean, if it keeps going up, but I'll tell you, there's even a level that I will swing trade it at. All right. Where will I enter a swing trade short? Look at this massive gap. We closed here and we opened down here. If we can fill this gap, I will be looking to short. It's right around 224. And this actually would be a swing trade for me, not just a day trade. I might do it as a day trade as well, but I would start a short position at 224. And you know where I would add? Look at this trend line. High pivot to high pivot, I would add at approximately 235. All right. So again, start one there. And then I'm just telling you guys what I am going to do most likely and my levels based on technical analysis, but a starter position here and an add level right here at this trend line. And again, those would be my 2 points of interest if Apple turns up and we get a rally. Now, what would be a culprit, even with the not so great earnings from Apple? What would be a culprit of a rally in Apple? You guys should all be able to guess this. If you can't, that's okay. But basically, if we did reach an agreement with China, Apple still has a lot of production in China. And so if some deal were to be essentially met, or we got a trade deal with China, then you would see Apple probably initially rebound sharply on the back of that trade deal. Okay. Flipping back to the charts, and let's go into the next chart here. Amazon is trading at around 193 right now. So Amazon initially on earnings did flush, but you're seeing it come back beautifully on the back of this jobs data. And even overnight, you can see it was rallying up. I did hold this into earnings with Smart Money Stocks and ETFs members, but pre-market, I did take profits just a little while ago. We made about 8 or 9% on the trade after our entry was down in the 174 and change range, or 175. So again, 175 to about 192 is where we got out, 191, but either way, right up there. And the concept here was I got out, even though it's moving higher, I got out right around here because I do have to recognize that it dumped on earnings and it's come all the way back. So for all I know, by the end of today, it could be all the way down here. And I don't want to take that risk. So remember, as a good investor or trader, we have to always remember that it's not so much about how much money we can make, but how do we protect our portfolio. So for instance, after earnings, I was like, dang it, I could have taken this off at 190 going into the end of the day. I rolled the dice. I held it into earnings. As of yesterday, after hours initially, that wasn't the right decision because the stock traded down to 180. So I basically lost $10 per share of gains. And I was still in the money for my 175-ish entry, but I gave back a lot of those gains. So when it rallied back up, basically to yesterday's close in green and slightly higher, I said, you know what? Let's be smart about this because for all we know, markets could roll over today and they could go right back down, book the profit in smart money stocks and ETFs, and then just move on. There's always another trade around the corner. And that's something that, again, if you remind yourself there's always another trade, then you're really not worried about missing out on other gains, right? Because, oh, well, yeah, I took money there, but now I can redeploy it to something better or something with more reward for the risk. All of those type of scenarios. All right, here's Block. Now, Block is getting hammered. This is the former Square. Now they changed their name to Block, symbol XYZ. Stock is down over 20% on earnings. Massive drop, bad earnings, lowered guidance. Probably not good considering they are a payment processor because what does that say about the consumer? But in any case, the stock is trading down here about $45 to $46 per share. It's below this pivot low. So for me, what am I looking at as a day trade? I have this level right here at 44. That should be a key level. And again, if I zoom in on this, you guys can see where I'm finding that level. Right here, there's a gap fill here. If it breaks that, there's another gap down here at 41. So day trading, probably around 44 or a pierce of 44. And then honestly, as a swing trade between 41 and 39, double bottom gap and this gap fill, this zone right in here as a swing trade might be very interesting. This one day trade, not a swing trade. This one day tradable, but also potentially swing tradable on the chart of Block. Okay. Again, there's a lot of stocks that reported yesterday. A lot of them are not making major moves. Atlassian, which is the symbol team, this one's down about 10% on the day. Let's look at the after hours action. So you can see it fell sharply to actually like 187, 188, but it has rebounded in the pre-market. So in the very least, you need it to come down to the lows. Excuse me. And if we go back to the chart, really, I would say 192 and change. There's a little gap fill right there at 192.90. That would be my first day tradable level right here. And again, that would be a level I am watching. One chart I love on a swing trade basis as a short is this one. This is Netflix, guys. Look at the parallel, okay? And again, I always try to bring a mix of day trading and swing trading to these game plans with specific levels. Look at this, pivot low, and then if we flip it around, we have major high, and look at what we're tagging now. Okay, so we know that we have a high pivot there. It's right into a level. If you look at the size of the sell-off each time versus and the size of the rallies, we know the parallel channel is powerful. And I wanted to show you the RSI. RSI is down here, and this stands for Relative Strength Index. Look at the negative divergence on the weekly RSI. High on the RSI, high on the chart. Higher high on the chart, lower high on the RSI. Higher high on the chart, even lower high on the RSI. So not only do you have a parallel here getting tagged, but you have a defined negative divergence on the RSI. And when I see that, it doesn't tell me like this second the RSI is telling me it's going to roll over. It tells me essentially that big money is distributing into retail money. That's the way I kind of look at the RSI. When you get negative divergences, but prices going up, it tells me more retail and like mutual funds and kind of like the B squad, C squad, and D squad are buying while the A squad is unloading. And that's again how I read that. And listen, could it go a little bit higher if the market rallies higher? Sure, but we should be very, very close to a top end reversal here. I do have a short position myself in Netflix, and I like it for a pullback here. On to Bitcoin. Bitcoin closed fractionally above that level. I'm watching to see if it confirms today. As of now, Bitcoin is still up a little on the day, but not above yesterday's high. To confirm, it needs to close above yesterday's high. Then it would confirm a break above this level. Although I will say you do have additional, although minor resistance, I would say right up here, right around 99 to 100,000 high pivot here. I still have not pulled the trigger on a short, but I certainly am not chasing and going long here. So again, we'll just keep an eye on this here as we go. But again, I will let you guys know if I pull the trigger on a short trade. I'm still long Ethereum because again, I like the flag pattern, but honestly, it's getting a little bit annoying that it hasn't broken up. When I say annoying, it doesn't like that's emotional response, right? I mean more that when you have a bull flag, there's something called a time count. And a time count, it should break up in that time count. This is taking longer than it should. And that's making me a little wary of why is it taking so long? Like if this doesn't break up off the bull flag by, let's say, Monday or Tuesday next week, I might just have to exit it for basically a break even on it and just be done with it at that point. So I'm going to monitor this very, very closely on Ethereum. Gold had the beautiful pullback yesterday. It is fractionally green today. I still think it's going down here. As mentioned yesterday, I did exit my short on gold for a good gain. I also exited Newmont Mining with Smart Money commodity members because it dipped all the way down here and filled this gap. Now, it could go down here, but I just, again, wanted to book a great profit from all the way up here as it rolled over. And so I did do that. However, I'm still holding a little bit on the short side of GDX with commodity members. And again, I'm looking for a target right here. So what I do, folks, and this is something I kind of stress to you guys, is that I had basically 3 shorts on gold. I had gold short via going long GLL, which is an ETF that is inverse 2 times to gold. I had a short on Newmont Mining and a short on GDX. So as gold rolled over, I was in the money on all 3. I took a little bit off on gold late last, I think it was either early this week or late last week. Then I took more off yesterday, the rest of my gold short off yesterday, and Newmont Mining as it went deeper in the money. And then I still left GDX on to kind of roll the dice. And you know, you can kind of play with the house's money that way, where when you're in the money on kind of 3 different things that are relatively the same, you take some off, and then you roll the dice on that last one and try to get a little bit more out of it, knowing that if it goes back to the upside, you can always stop out, break even, and still keep the profits on your other trades, on the other ones. So again, this is all methodology that is, again, it's money management, it's being smart, it's thinking logically, it's, again, not being greedy, again, avoiding those pitfalls of a trader. All right, back to the charts we go here. Let's finish up here with silver real quick. If we look at silver, silver is basically flat. I have no real new updates on silver. It still holds this level with resistance up in this range. Oil, remember, oil bounced yesterday after Trump basically threatened any country that was buying oil from Iran that they would not be able to trade with the U.S. You can see the bear flag broke down. Yesterday, we got a little bit of a bounce, and right away today, we're already flat to negative on oil. And then lastly, natural gas also had a pop on those comments from Trump. It is pushing above this level. I am obviously not looking to short because it's not extended enough. But I will say this, if natural gas gets up here, this is a level where I would consider a small short. Pivot low, and then you can see pivot high. A rally into about 380. That might be a high enough probability trade for me to pull the trigger on a short on this here, okay, on natural gas. All right, guys. So listen, as always, folks, I love this, and I love doing this with you guys, and I love the excitement and how much you guys are learning. The comments when you guys tell me, and listen, I don't have time to necessarily comment or like every comment, but I do read them. I do read through them, and the people that are saying that, listen, I've helped them. That's everything to me. Listen, man, I wouldn't spend the time doing these game plans if I didn't think I was helping people at this point. I'd just be trading in the trading room with my traders, and we'd be making money. So it means a lot to me. It fills my soul. Making money is great, but again, there's something to be said for feeling like you're making a difference in a world today where it's tough for a lot of people out there. And so if I can do that with you guys, it's my pleasure and my honor, and I thank you all for supporting us here at Verified Investing. One little announcement, guys. On Monday, I will be launching an options service, so start looking for that on Monday for options trading. People have been bugging me for the last 2 years saying, why can't you do an options alert service? Well, I will be launching one with my other traders on Monday, so take a look out for that. All right, you guys are awesome. Have a great weekend, folks. I'll talk to you soon. Take care.